Okay, today is April 5th, 2018. It's around 7:25 on the West Coast PM, of course. So let's take a look at the SPY and the ES and see what kind of game that it will be played tomorrow for the weekly OpEx. You probably have noticed that in the recent OpEx, whether it's Monday, Wednesday, or Friday, or whatever, right, in the last couple months, especially sometime this year, I think a lot of people basically got caught in a game of try to find a pin, and what ends up is these machines just run the hedger out of town or something, or the premium sellers, okay, and they just squeeze it up, run it down, take their money on the put, and then roll it over to the call, and then push the call, push it up to the call in the money, take the money, and then slam it down and then pin it, right? And after they make money on the downside and on the upside, then they pin the donkey and the bag holder just holding the bags, right? Okay, so let's take a look. I got the open interest. Well, this is on the screen right now. It's basically today's, end of the day stat of the volume, and the open interest, basically reflect Wednesday's close open interest. So we'll show you the open interest chart later that reflect today's close. So essentially, the first thing first is you notice 265 here. Right, the 265. See the call open interest is 33,000 as of the close of Wednesday, and today traded volume is 38,000. Right now, the thing is the open interest after today's close, what ends up was somewhere around 28,191 on a 265 call. So you can see that the open interest 33,000, so I got it on the wrong column. The 33,000 on the open interest on the call at the close of Wednesday, right? So essentially, we saw a 5,000 contract decrease on the 265. Now let's go take a look at the put. The put open interest at the close of Wednesday is 21,900, right? 21,900. And the open interest as the close of today, Thursday, is 27,067. Right? So that's about 5,000 increase. Right? So you can see, could that 5,000 that decrease on the call flip to the 5,000 on the put? Maybe. Nobody know. I don't know. Maybe the only guy that knows is the guy that make the transaction, right? So anyway, all right, you see the 265, right? And you notice where the SPY closed. The SPY closed at 265.64, right? Okay. So, but it went up higher than that to during the day, right? So a lot of people. A lot of guys that already cash out and probably got sucked in some of the latecomer, and these trader volume basically is a flipping, right? From the smart money to the dumb money. Basically the guy that wanna got in on early and taking profit just sold it to the guy that want to get on board as the SPY was making a run up. Okay, and then what they did is they also piled on a little bit on the put. So right now the ES is actually down. Okay, so let me get that up and see, could we take a look at the ES. So let me pause for a little bit and get back a bit later with the. Okay, let's take a look at the ES. Here's the hourly with the overnight stat also, right? The graded area is the overnight session, and the white area is the regular trading hour session, the RTH, right? So you can see ES is being dumped, and right now it's saying it's down 26 and a quarter, right? Okay, So the low is basically, let me get my little thing here. The low is right 26.1975. Okay, all right. So you can see that what did we say the open interest was for 265? All right, 265. So let's see, 261. I have a 263 and a 261 and a 260 over an interest peak, right, on a put. So you could see those guys that piled on the 265 when it opened. If it opened down here, even right now at 263, you know, the 2636, that's essentially somewhere around that 262, 263 area, right? Then those guys that is holding the 265 probably will cash out, right? And even the 263 will cash out. So as those guys take their money, take the profit, that will probably put a floor on the drop, and that will push it up back up a little bit, right? Then depending how they want to play the game, and see how they're going to pile back on to the 265 call, right? Because by then, you know, a lot of those 265 calls pretty much deep in the money, out of the money. I mean, then they probably will close out, and then those people that sold the 265, if they were that dumb, you know, because yesterday is 265, of course, the guy that bought the 265 put probably would have sold the 265, right? But maybe they will come back and pile on to the 265, and they will run it up. And I do have, interesting enough, you know, be amazing if these things turn around and go to 269 on the SPY. You know, never say never, right? So that could be a game, but there is a 266, and the lotto number probably will be 265 if they're going to run it down and then coming back up. As soon as they cross 263, look for a possible lotto number at 265. When I say lotto number is that they could probably end up pinning there, but they probably will run past that. So if you are playing the 264.50 or 265, you might be able to cash out a little bit if there is enough time. All right, remember, theta decay is very fast. All right, so you got to be on your toe when you're holding these things. As soon as you get profit, you hit it. All right, okay. So that's basically on this SPY here. I mean on the ES. Now, if we take a look at SPY, although I don't think SPY is actually trading right now, but right, you can see the SPY came down to this 261.5 somewhere. Okay, all right. So I'll show you the open interest chart a little bit later, and you can see. So keep in mind 261.5 is the low. So let's say the price will never get back to this low here, then that would be the overnight low for the SPY, right? Okay. And if it doesn't get any higher than the close of yesterday, so that would be 265.64. So let's just say 265.5, right? Okay, that will be an overnight high, right? This is 65.80. Okay, so it's actually got a high up here. That's a little bit after hour, but basically look at here. Instead of looking at the SPY, we're basically looking at, and you just have to factor out, you know, the difference, you know, in the correlation. So 263, we basically got up here somewhere around, what the heck happened to my, okay, let me move this over here, then I could see this thing. Right, so the high is 2665. That's basically what it is. 2665. That's at 1 p.m. That's at the close. That's the high. So we want to take a look at that. And right here, okay, is 2664. Right, so that's be 266.5 somewhere around there. So we bring it down. So probably be we're probably talking about 265.5. Right. Okay. All right. So they could run that thing down there. Okay, I mean, or run it back up. So that would be the SPY thing. Okay. I know I'm not going to do any technical analysis and showing level of support and that sort of good stuff, but tomorrow's OpEx, those things is useless. It's more of what the machine decide to run the squeeze on, and that's why it is so, the market is so messed up now with all these OpEx every other day on SPY. It's really a more of a game than anything else. So let me go and switch over to the OI, and then we take a look at the open interest on the SPY, and then see what are some of the possible game that chart is telling us that could be possible tomorrow. Okay, let's take a look at the SPY OI. The green is the call and the put is the red. All right, you see I'm pointing here at 265. Okay, it's the same number or close to it, the put and the call. All right, then if it was to close at this particular price and with nothing change, because everything stay unchanged, then this would be very beneficial, right? It will wipe the call and the put out at the same strike. Okay, all right. So, but let's take a look. 261 and a half, right? 261 and a half, 261. We're basically looking at that on the extended hour session or the overnight session. Okay, so these guy here, and these guy here that's holding these, or this guy is in the money, right? I mean, even at today's close, so we're not even going to talk about those guys, right? So all these guys up above 265 is in the money, but these guy got lucky overnight, right? So these guy is going to cash out when the market open, right? Now, once this market open, all these all these call, right, will be out of the money, right? And if those people that's holding that, right, let's say some people are holding large position of these guys, right, and somebody have to sold these options, right, these call to the other side of the trade, right? Okay, so these guys probably think they're sitting pretty. So are these guys, right? Say it's out of the money, the premium that they collected, and this thing will expire worthless. So they're going to keep all the change that they got. Well, what if these guys are going to start pushing the price up here, right? And those 265 call holder, all of a sudden it was out of the money when it opened down here at 261.50 and 261, and all of a sudden they are pushing it back up, right, to 265.50 and so on, push this into the money and these into the money, and then all of a sudden these guys start covering, right? Okay, and then they just continue to put. Now beware that and be mindful, right? One way to cover these or to to hedge these things, those people that sell these SPY, right, or the market maker, right, they sell the SPY call, they basically go hedge it using ES, right? They essentially go and buy the ES to hedge the call that they sold, right? And likewise, the put that they sold, they go sell the ES, short the ES to hedge the put. Okay, right? So it's a sort of like a vicious cycle, or a dog wagging the tail and then the tail wagging the dog, right? Okay, so let's say, for example, when this thing push up and all of a sudden those delta hedger have to go and buy some more, right? Buy some more ES to be delta neutral, okay, right? To basically hedge those position on these calls as these things get back into the money, right? So that ES essentially going to push the S&P 500, right? And the S&P 500 essentially going to push the SPY further up. So basically like a vicious cycle, right? Once that thing start pushing, right, the hedgers start, buying more ES future, right? And then it pushes the price of the SPY up, and it just further fuel more buying to go and further hedge the the higher price on the SPY, and then when these next strike come up, then those hedger have to go and buy, right? Okay, so it will get to the point that they just run, right? And that's why you see spikes when it come to on option expiration, right? When these guys start squeezing it, okay? All right, so that's the game that could be possibly play out tomorrow. So when we come down, open down, then we're going to come back up, and as these guys start running up, then we're going to go and whoop, do like a little, parabolic up and just squeeze, right? Okay, so once we squeeze those guys, then all these guys that holding these calls, then they start taking profit, and then all of a sudden, then the delta hedger could, just get rid of the ES, and then now pushing it back down. So you can see how this flow, right? Okay, that's how the market works. At least from my perspective. I could be wrong. All right, so good luck.